This episode is brought to you by Progressive Insurance. Do you ever think about switching insurance companies to see if you could save some cash? Progressive makes it easy to see if you could save when you bundle your home and auto policies. Try it at progressive.com. Progressive Casualty Insurance Company and Affiliates. Potential savings will vary. Not available in all states.
Good afternoon. Let's get right down to business. We are doing more at 4 weekday afternoons right here on 790 KBC after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com, and your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, Spotify, all of your favorite podcast platforms. Big day on Wall Street with President-elect Donald Trump ringing the opening bell today at the New York Stock Exchange. People were chanting USA, USA. President-elect Trump flanked by the Vice President-elect J.D. Vance, the incoming First Lady Melania Trump, and the New York Stock Exchange President Lynn Martin. Two of the President Trump's children, Ivanka and Tiffany, also were on the stage there as the opening bell rang. We did see the president's entourage, including his pick for health secretary up there today, RFK Jr., his Treasury pick, Scott Bessent, his choice for Interior Secretary Doug Burgum, and the Commerce Secretary pick, Howard Lutnick, and Kelly Loeffler, the president's pick to lead the Small Business Administration, and the wife of the New York Stock Exchange Chairman Jeffrey Sprecher also attended that big ceremony to kick off the day on Wall Street, which ended lower, coming back down from record highs for the NASDAQ, which started the day above 20,000 for the first time. Wall Street pulling back today. Investors taking in the latest economic readings ahead of the Fed's big meeting next week. The latest report on inflation today at the wholesale level, the Producer Price Index, came in more than analysts expected in the month of November, though moderation in service costs pointed to a continuation of the broader disinflationary trend. According to analysts, initial claims for unemployment benefits unexpectedly did climb, though, last week, raising concerns about job market resilience. The Fed will be taking all that in at their big meeting next week. But right now, bets on the cut next week stand at about 98%, according to the FedWatch tool we keep an eye on. We'll talk more about that here shortly. The Dow coming in for a closing loss today of 234 points. The S&P 500 down 33. The NASDAQ down 132, coming off its record high, popping back below 20K after hitting that landmark just yesterday. We're at 19,903. The yield in the 10-year note has suddenly popped to a three-week high at 4.33%. Bitcoin still at 100,000 here, up 159 right now at $100,000, 100,156 to be precise. Ethereum hovering just below 3,900, and Doge at the moment at 41 cents. Looks like Adobe had a rough day today after the Photoshop maker forecast revenue well below analyst expectations. We did see Tesla having a big day again. Well, the stock has shot up about 21% over the past 7 trading sessions, pulling back today by more than 6 to 418. Elon Musk, meanwhile, has exceeded a net worth of $447 billion, making him the first billionaire to ever top the $400 billion mark, despite today's drop in Tesla shares, according to the Bloomberg Billionaire Index. I'll talk Tesla and all things cars later this hour, as a matter of fact, with our go-to car expert, Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Amazon is planning a $1 million donation to President-elect Trump's inaugural fund, as founder Jeff Bezos and other tech leaders now are trying to make up with the incoming administration. The donations being prepared as Bezos, who's Amazon's executive chairman, is set to visit President-elect Trump next week at his private Mar-a-Lago residence in Palm Beach. MicroStrategy stock could surge even higher in the coming weeks, depending on whether the NASDAQ 100 stock index classified as a software developer or as a financials business. According to a leading crypto analyst, the Virginia headquartered company could receive a major boost if it's included in the NASDAQ 100 in a shakeup of the stock market index on Friday, according to MarketWatch. Price of oil ending a bit lower today, and we're keeping an eye on that, of course, with the ongoing upheaval in the Middle East. The LA City Council, as you first heard on this program live yesterday, voted 12-3 to increase the minimum wage for tourism workers in Los Angeles at a more gradual rate and provide improved health care benefits. The business groups in the area were very much against this eye-popping jump in the minimum wage, which will hit $30 an hour by 2028. I'll discuss the impact of this with Mark Wilbur, chairman of Employers Group. He's a founding member and he was founding member and also former chair of LA BizFed, the Los Angeles Business Federation, former associate dean of the USC Marshall School of Business. Mark Wilbur will be joining us live later this hour. But first, on your money, the markets, the economy, and the whole works now. Joining us live, investment expert Bryan Perry, chief investment strategist and portfolio manager at Mint Asset Management at mintassetmanagement.com, also author of the 25% Cash Machine. Bryan Perry, thanks very much for taking the call this afternoon.
Real great to be with you, Frank. And this week is really all about putting America first, as it's been emphasized on the floor of the New York Stock Exchange today. Trump is breaking bread here with the Mag 7 CEOs here one at a time, and also a number of other S&P 500 CEOs here to reason with them about reshoring a lot of their businesses here back in the U.S. here and driving home the message of some phenomenal incentives for them to do so. So as opposed to being adversarial with these CEOs here, he's trying to really figure it out from the standpoint of making so that it's a win-win situation here, and just making good on overseas business coming back to the U.S. The market's really buying into that here. However, for the breadth that has been negative for the S&P 500 for the last 8 trading days, despite the fact that the indexes have hit new highs, which tells you under the hood here that aside from the Mag 7, putting up new fresh highs, a lot of the market here is struggling to make new highs as well here, and there's some divergence here going on here that people need to be aware of here. So this is a real stock pickers market right now, and the leaders are definitely they're shining a bright light, but there's a lot of stuff underneath here that needs to be avoided. So definitely more of a stock pickers market, and because they do dominate the indexes, Frank. Buying into the S&P and the Nasdaq weightings have also been very much a good call. The second half of December is typically and historically a good time to be fully invested in stocks and indexes. The first 2 weeks of December have historically been tough because they come off of Black Friday and Cyber Monday. So there's a lot of enthusiasm coming out of Thanksgiving into that next week or so, but then there seems to be a lot of consolidation and digestion here for the first 2 weeks of December, which is what we're seeing. But people want to be certainly, looking at their short lists and certainly maybe looking at also some of the indexes here for the second half of December. With that in mind, you've got some other forces outside the U.S. that are doing, that are also going to help us here. The Swiss bank lowered their key benchmark interest rate by 0.5 point today because the inflation rate's coming way down, as well as the ECB lowered by 0.25 point today. So that's going to drive U.S. rates lower in the weeks ahead here. And as you noted, the CME Fed Watch tools, showing for almost a 100%, validation of the fact that we're going to see a 0.25 point here by the Fed next week. That probably is going to be followed by a pause in January because the odds of that are quite low of another rate hike in January, but they increase again back in February for another 0.25 point there to go to 4 to 4.25 on Fed funds rate. So, that seems to be where the backdrop is. It seems to be where the disinflation argument still is intact, even though it's grinding lower at a much slower rate than most had hoped for. And you still have an AI-dominated market here. You've got a lot of tech stocks that aren't doing that great, but anything that's associated with AI is putting on a show. So that's really done well here. Trump is really proposing a lot of things here that have got a lot of people's attention here. A 15% corporate tax rate down from 21%. He wants to lower capital gains tax rate to 15% from 20%, and as well as bring down the tax on qualified dividends, which is still to be determined what that rate might be as well. So these things here are, the markets. It took today was all about just digesting yesterday, but it also means that people need to start looking at technicals here and making sure that they're in the right stocks, because a lot of portfolio pressure out there by fund managers to own the right stocks going into the end of the month, and you want to be part of that fund, those fund flows that go into the big winners here, because those stocks pull back. There's a great chance here for the market to finish strong, but it's going to be led by the stocks that we've seen here in the first couple days of this week perform well.
On the air live with investment expert Bryan Perry, the chief investment strategist and portfolio manager at Mint Asset Management at mintassetmanagement.com. Bryan, thanks again for that very thorough assessment as always. And And then there's Bitcoin and the cryptos. Can't ignore that now with Bitcoin still above 100,000 here at the moment. Kissing, a record close, as was reported yesterday. It's been up to around, 103,000 as the all-time high. It moved above 100,000 again this week and is still above 100,000 here as we speak. What's your assessment on the cryptos here?
Well, again, Trump even talked about that today on the floor of the New York Stock Exchange about how we want to be the center of the Bitcoin, the whole experience here with, not to let China dominate this particular marketplace. So he's looking at this as almost as a foreign affairs policy type situation, as much as something where we want to have, another storehouse of wealth. So I like the enthusiasm here by Trump, as well as the incoming SEC chairman here, who is a pro-crypto guy. And what you've got now is, again, you've got another, take a look at, there's going to be another forking in Bitcoin here in a couple of years here, and the market's already starting to warm up to that. I'm seeing estimates for 200,000 to 250,000 here for 2025, Frank, and that's not out of the realm of possibility. So that's a double, from where we're currently at here. That's a big move here. We always talk about, a lot of different aspects of Bitcoin, but this is really one where people just want to, because it's a limited supply. It tops out at 21 million coins. There's about 18 million coins that have been produced here. It's going to take quite a good while, another, call it, 2040 is when they actually finally finish mining Bitcoin. But there's somewhere between 3 and 4 million coins that have disappeared, missing, or been hacked, and are in frozen wallets that'll never be recovered. So the supply is actually a lot lower than what the outstanding amount should be. So I just think that the Bitcoin phenomenon is alive and well. It came back down to 94 and change, in the low 90s, and it's come right back up here. So this is an area where I think people, if you get anywhere in the 95 area to the 100,000 area, it's okay to to initiate and add to positions.
All right, and we're watching MicroStrategy and what's happening there. MicroStrategy stock, it's headquartered near where you are there. The Virginia headquartered company could get another boost if it's included in the NASDAQ 100 on Friday. Have we gotten that news yet? And what about MicroStrategy and Michael Saylor and that whole big story there?
Well, I think they're the fourth largest holder of Bitcoin altogether in Bitcoin, and that includes Fidelity and BlackRock and the major Schwab and these guys. So they own currently something in the range of like $41 billion, like 423,000 Bitcoin. It makes it certainly one of the top 5 holders of Bitcoin in the world. And he's been buying more. He's been buying on the way up here. So that's a phenomenal story, the fact that they're going to put a company whose balance sheet is basically radically weighted in Bitcoin on the NASDAQ 100. It's just, but the NASDAQ is always trying to find new ways to print new highs. And so therefore, this is a company here where they're saying, if we're going to make a bet on Bitcoin with a company that still is technically a software company, then why not give this a shot? Because they've certainly tried other things as well in the EV market and other things like that, not Tesla but other names, and to try to make a stand in certain other industries. This looks like this might be legit, Frank, from the standpoint of them trying to put MicroStrategy in the NASDAQ 100.
Very interesting. And the Magnificent One pulling back today. NVIDIA down a couple dollars to 137 and change. Certainly the whole Mag 7 come to life big time. Tesla has had a record run-up, pulling back today, by the way, down nearly 7 at 418 and change. Elon Musk now, according to folks that keep track of this, worth is above $400 billion at this point. What about the Mag 7 names led by NVIDIA here?
Okay, well, there was China came out earlier this week and talked about how NVIDIA is, trying to run a monopoly in this business here. It's only because they're the smartest guys in the room, and they've come up, they're a mile ahead of the competition here. These stories typically are buying opportunities. It's been that way for all these FTC investigations. Look at Google here this last week. Just had huge moves here. Microsoft and things like that, where the FTC has been constant in the last 4 years after these big names to either try to slow them down or break them up or fine the hay out of them, and so the New York AG gets these big checks. The what I see here in the video is like this looks like a nice double bottom in the making here. The Blackwell chip is on fire. They're selling everything they can print, and so at 137 here, down from 152, I think that's a nice buy. Tesla here, the stock shot higher basically on General Motors saying we're out of the EV business. They shut down the production of Cruise here this week, and the stock shot higher here, vaulting Musk into this stratospheric net worth, and that's just phenomenal. And so it just where I think Trump is coming in is like saying, I kind of like to see these big companies do well, and that's kind of where the Mag 7 is rocking and rolling right now, with the fact that there's going to be a lot of breaking of bread, like I said earlier, with Trump and these Mag 7 CEOs to figure it out, so that we can all do well here, and that your shareholders do well, because Trump is he's a pro, a small retail investor advocate that wants to see people do well and buy the stock market.
Breaking caviar-covered crackers, I think, maybe in addition to the bread. Absolutely right. Excellent point there, Bryan Perry. So while we have a chance here, I know you always do a very thoughtful job on this. Any specific places where you are putting money now and or taking it off the table?
Well, absolutely. I mean, you got to be very careful here in some things. We saw, Trapdoor in Adobe today, and other names that have really, when they don't do well, they just really fall out of bed. We're seeing there's no place to be hunting very, very heavily in energy and healthcare right now. Materials and utilities are also sluggish. Big cap tech, travel. So today, Broadcom after the close, up 13% on great numbers here. Costco also. Trading a little bit lower here on numbers, but they still beat on the top and bottom line, but it ran up heavily in front of that. I've been buying Lowe's here this last week, full disclosure, for Med Asset clients here. Also, the company that runs the NASDAQ is called NASDAQ Inc. It's NDAQ for people out there that want to be, in the underlying comment of the company that does manage the NASDAQ. Norwegian Cruise Lines. Cruise lines are happening here, NCLH. Vista Energy here, VST, which is big in the nuclear energy here, which is the next big thing for supplying these data center energy needs. Arista Networks is certainly an infrastructure play for data centers there. It's a core name for AI. And also, lastly, is Doximity, which is it's a fresh name for people, DOCS, Docs. And it's a company that is a cloud-based company for really making the healthcare business efficient for physicians and nurses and the personnel side of the business. Coming off, you've got to see Oracle really kind of they meet their numbers, but they really didn't give great guidance here. So I sold my Oracle here this last week. Uber and Lyft still facing a lot of downdraft here based on the fact that Waymo and other types of self-driving businesses are going to keep going here. Sold my Samsara, which is the logistics AI company here, IoT, took a nice profit there. And we've been talking about the constant weight on the healthcare providers, the insurance companies, like UNH, Humana, Elevance, which is formerly Blue Cross Blue Shield, Anthem, and then a couple of special retailers here. You've got American Eagle Outfitters, which is looking lower here after missing numbers, and then now as another place that I call setups, Frank, and this is the last thing we'll talk about, is stocks that have gapped higher that people should put on their short list, because when they fill the gaps underneath, and normally they do, it's a great time to buy these stocks in. It's Marvell, it's Pure Storage, it's DocuSign, it's Tesla, it's Reddit. It's Macula Libre, it's Credo Software, and Alta Salon. And those stocks, when they fill the gaps, normally they do, those are ones that people should have on their short list to pick up on the first big pullback when they do fill those gaps.
Terrific, Bryan. Well, thank you very much for taking the call today. What's been another epic week. That is investment expert Bryan Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com, also author of the 25% Cash Machine. Bryan, thanks again for joining us here live, and wish you a great rest of the week, heading into the weekend here already, and Look forward to speaking with you again very, very soon.
You as well, Frank. Thanks so much.
Thank you very much. And out to the freeways we go now on 790 KABC. Mottek On Money continues here in 790 KABC. Good afternoon. Big start to the day on Wall Street today with President-elect Donald Trump ringing the opening bell at the New York Stock Exchange. Stocks did pull back today from record highs. The NASDAQ had started the day above 20,000 for the first time at a record high, pulling back 132 points at the bell at 19,903. The S&P 500 slipping 33 at 6,051. And they're now pulling back 234 points at 43,914. All the major averages coming off of recent all-time highs. The price of gold today pulling back nearly $6 at $2,703.80 an ounce. Silver down 16 cents at $31.45. Checking the cryptos now. Bitcoin's been on a tear this week again. Right now, we're looking at Bitcoin up about 300 at $100,280. Ethereum up 20 at 3,891. Doge at the moment up slightly to 41 cents. Price of oil moving lower today, down 9 cents at 69.93. Tesla has been on a roll lately, pulling back nearly 7 today at 418 and change. Nvidia, the magnificent one, down nearly 2 at 137.34. The yield in the 10-year note has suddenly shot higher to 4.33%. That's the one that impacts the fixed-rate mortgage rates. It's now at 4.33. That is a 3-week high. And now the latest news for you here on 790 KABC. Mottek On Money continues here on 790 KABC. Good afternoon. As you first heard on this program 24 hours ago, despite strong opposition from business groups, big businesses, small businesses, and many economists, the LA City Council voted 12-3 to increase the minimum wage for tourism workers and have employers pay for additional health care benefits, a move that comes as the LA area prepares to host several big sporting events in the coming years, including the Summer Olympic Games coming up in 2028. The wage for tourism workers will be going up gradually now to $30 an hour by 2028. And joining us live now to discuss this further, Mark WILBUR, founding member and former chairman of the Los Angeles Business Federation, LA BizFed. He's chairman of Employers Group and former associate dean of the USC Marshall School of Business. Mark WILBUR, thank you very much for taking the call this afternoon.
Hi, Frank. It's great to be on. Thanks for having me on.
Big news here out of City Hall, and the dust still settling on this vote. Business groups had opposed this. What's your reaction to what just happened here?
Well, as I've said before to you, people, if they're going to run for office and they have any responsibility for any kind of economic decisions, they should have to pass a basic economics exam. I think it's absolutely outlandish because the final increase will be to $30 in July of 28, but they are coming right out of the gate in February 1st, 2025. with an increase up to $25 an hour. So, I just want to remind people the Olympics don't happen until 2028. It's not like they're showing up this February. So, if you and I wanted to go make investments and things like that, we're now having to look at a, 30+% increase in wages in the next couple of months that's going to be sitting there impacting your business until the Olympics arrive. So this is going to be like, the idiocy with the fast food industry where thousands of jobs were lost when they did this. And the same thing is going to happen now, and more jobs will be lost in this scenario. That might be right-sizing, though, to be honest with you, Frank, because we're still not back to the pre-pandemic levels of visitors. In 2019, we had like over 88 million visitors to LA. And, in 2023, that only had climbed back up to 75. And I haven't seen the most recent 24, but I know it's not anywhere near 88 million. And so it's, this is a circumstance that is voting against jobs. It's voting against improving our economy in Los Angeles. It's voting against making more investments into our economy as a business owner or anybody that wants to run a business. And so it's a bad decision all the way around. None of these people actually understand how the world works. It's really devastating.
They think people are going to get $30, but it's going to be zero, as it was the case, as you mentioned, with the fast food situation when it went up to $20. Now, they've been changing the numbers a lot lately. So according to what I understand, under the the thing that was passed yesterday that looks like, and the city attorney's office is expected to update the so-called living wage and hotel workers minimum wage ordinances to put their final stamp on it. But it looks like as of February 1st, the tourism minimum wage will be $22.50, increasing to $25 an hour by 2026, $27.50 by 2027, and $30 by 2028. In addition to that, last but not least, looks like there'll also be a health care benefit of $8.35 on a weekly basis, which takes into account the average cost of health care divided by the hours an employee works. So in addition to the higher wage, then additional health care cost as well. What's the reaction to that part of this?
Yeah, I mean, it's just on top of the hourly wage. I mean, whether they couple it with the hourly wage or they just put it on top of it, it doesn't really matter for somebody that's running a business. It's just more cost, and it just makes it much more difficult. To be able to run your business, it's going to be pretty tough, Frank. I'm really concerned on what this is going to do to an already struggling industry here in the Southland. This is a pretty big impact. I mean, just to give you an idea, just so people understand, March through June of 2023, the fast food industry, before this implementation of that increase hit, they added over 9,000 jobs. And over that same time frame in 2024, with that increase there was a total of 406 jobs added. I mean, like 3 digits there, Frank. That's 406. That's all that was added in the same time frame that the prior year had added over 9,000 jobs. I mean, so this is the kind of impact that's coming to the hotel industry.
And I've heard anecdotally that there's concern now that a lot of restaurants and hotels may be closing because of these higher costs, wage costs, and now healthcare costs too. And apparently this has happened in New York already, where it's tough to find a restaurant in a hotel in New York. And now people are facing these laptops or pads, iPads and so forth to order. So as companies, restaurants do whatever they can to reduce their costs. What other impact is being discussed here in the Los Angeles area, given this vote that we just saw?
Well, I think you hit the nail on the head. You and I have talked about this before. The whole self-service aspect of fast food, as well as, we're going to get to a point where there won't be anybody to check you in either. You're going to have it on your app. The app will be your key. You'll have to check in before you get into the hotel. You have to swipe to get into the hotel. I mean, that's what we're doing. So what does that equate to, Frank? Just more elimination of more jobs, because it's the only way you can keep the doors open for the investment. Because people think that these places, make, Taj Mahal kind of money. Some of them barely get by with these because they're paying taxes on top of taxes that are on top of the increased minimum wages. So, it really makes it so difficult. I'm really concerned that we aren't going to be ready for the Olympics at all. It's just there's still the squabbling and unpreparedness that's going on. Thankfully, BizFed is taking some actions. They've created a whole subcommittee around getting our heads around the important aspects of being prepared for the Olympics. A lot of amazing people in that organization, as you know, and they're really starting to put their teeth into this in hopes that we don't screw up the Olympics.
Unbelievable. Well, we'll keep a line open to you and all the business leaders here. We had Maria Salinas from the LA Chamber on as the vote had just been taken, and that bombshell news came out just about 24 hours ago. We'll continue to follow this closely and the business impact of all this. Mark Wilbur, founding member and former chairman of the Los Angeles Business Federation, also chairman now of the Employers Group and former associate dean of the USC Marshall School of Business. Mark, always great to have you with us. Thank you very much for taking the call here this afternoon.
You bet. Thanks so much, Frank. It's always a joy to be on.
Likewise. Thank you very much, Mark. And let's get right out to the freeways now to check your ride this afternoon here on 790 KABC. Mottek On Money continues here on 790 KABC. Good afternoon. Big news in the car business this week with GM pulling the plug on the self-driving Cruise robo-taxi project. GM is shutting that project down. What does that mean for Waymo and Tesla, which pulled way ahead of GM on all this. Tesla stock, meanwhile, has been on a historic roll. And it looks like Elon Musk today hit an estimated net worth of $447 billion. Yep, you heard me. $447 billion, the first ever billionaire to top the $400 billion mark, according to the Bloomberg Billionaire Index today. Meanwhile, Jaguar's new ad campaign and rebranding still creating a buzz in and out of the company. Let's talk all things cars now here on Car Conscious Southern California. Joining us live now, our go-to car expert, Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Lauren, good afternoon to you.
Good afternoon, Frank. Yeah, there's a lot going on. I'll let you ask where you want to start because there's so much happening right now.
Well, that big news, GM shutting down the Cruise Robo-Taxi project. This, as we see, Waymo's here all over the place here in the Los Angeles area now. And, of course, we had Elon Musk with that big splash announcing his Robo-Taxi offerings. What's your reaction to GM now saying forget about the Robo-Taxi project?
Well, Cruise is the name of the company that runs the robo-taxi, and it was all designed specifically to be autonomous robo-taxis. But taking that off the table, what is the future for the Cruise division? I mean, that is really what their company was supposed to be doing. So maybe they'll be making electric vehicles, but to me, the Waymo seems to be the only one that's going to be able to handle the different weather conditions, at least when it's warm, not in the northern half of the country, because you don't deal with snow in LA. But I was just in Austin and I saw a couple Waymos running around, but that's all you're seeing is a few of those Jaguars, which leads me to the Jaguar conversation when every single I-Pace, which is their electric SUV, so if you own one, note that there is a recall on every single Jaguar I-Pace for the battery. So if you own one, make sure to go to the dealer and find out. And Jaguar, I worry about the future of the brand. They claim they're not going to make any more I-Paces, which is the Waymo delivery vehicle. So what are people going to be riding in? And that, again, that could impact Waymo. They'll have to maybe partner with another brand. I am very concerned about the future of a lot of brands, but not Tesla. I know what will happen when it comes to Tesla. They're one of the big three automakers now in the U.S. We have Ford, GM, and Tesla. Taking away that electric vehicle mandate and that tax credit is not going to impact Tesla at all. He will continue to be the leader in the field, the biggest chunk of the market share of electric vehicles. But I am aware that other brands, maybe not Ford and General Motors, but other brands, and I've been talking to executives, really note that they cannot make this electric vehicle mandate that's required by California. There is not a possible way for them to go 100% EV. I also note that when President Trump gets into office, he's going to remove the mandate and the $7,500 tax credit. But what I'm really concerned is California still holds all the power with the California Air Resources Board, known as CARB. Number one thing that Lee Zeldin should be doing, who's going to be taking over the EPA, and Sean Duffy, who will be working at the Department of Transportation and NHTSA, is to take the power away from CARB. If they can do that, and Obama gave them even more power, we need to reduce that power and not wait. That has to be done pretty immediately. We waited 4 years before President Trump decided to go after that in his last administration. It was too late. By the time it goes through the court systems or has to be voted on, you lose that power. So he has essentially a 2-year window from the time he takes office before the midterms come to get rid of CARB, remove the mandate, remove the $7,500 tax credit, and let consumers buy what they want. That doesn't mean electric cars are going to go away. Tesla will always be there. He will always have, as you can see, I mean, $480 billion is a lot of money. But he's using that money for other things as well. If he decides to do the robo-taxi, they'll need to have government mandates put in place, which never happened, which definitely hurt GM and Cruise. In addition to that, we still have to deal with the weather issues that do occur. And we still have a hacking issue that's possible. And, of course, we've got consumers that aren't all jumping in on that. And we still have insurance companies and reinsurance companies that really aren't in for going with all autonomous cars, because unless 100% of the cars are autonomous, that's the only way there'd be no accidents.
How much of a hit is GM going to take on this decision? Remember also Ford sustaining big losses on every EV they sell, right? Remember that report that came out not too long ago? What about all the bottom line for these companies?
Ford loses
Yeah.
$44,000 on every single Lightning F-150 truck, which is their electric truck or their Mach-E. You can't make that up in volume. And I know Jim Farley, who's the president, is currently driving a Chinese EV. I don't understand why, from a PR standpoint, that he says he doesn't want to give up the Chinese EV, because the last thing we want is Chinese cars here, because it will hurt our industry, it will hurt our economy, it'll hurt jobs for sure. Although it sounds great to have choices, we've seen this whole scenario before. Lots of losses from General Motors also on their robo-taxi. We're somewhere in that $18 billion range. The numbers are staggering. But this happened in the 80s. The manufacturers got greedy. They raised the prices when there were shortages. Then they started producing product that consumers didn't want, and it allowed the Japanese to come into the marketplace. And here came Honda, Toyota, Nissan. Nissan's struggling horribly right now, and they probably have like a year left in the industry if they don't make a massive turnaround. But Toyota is doing very well. Honda's doing very well. And they didn't agree to the 100% electric vehicles, and they're going to pay the fine. Both companies have said, we're going to pay whatever fines are necessary, but we are not going all electric. And the last time that, like I said, this happened, you allowed the Japanese in. And then again, we had about the early 2000s. The Koreans came in, actually came into the 90s, but they really started making a big bite of the marketplace in the 2000s. And here we are today, and the Korean car industry is taking a large chunk of the auto industry. And they're not going anywhere. Kia and Hyundai and the Genesis line. Genesis has a new line coming out, performance line called Magma, which is going to go against the performance German cars. And then, speaking of Germany, Volkswagen's in trouble. They're struggling with their unions right now, where they want all the employees to take a 10% pay cut. So the industry is in flux. It is absolutely crazy. Almost every brand has something going on. We're seeing a lot of movement with executives, and I'm very worried about the industry, and that's why we need to do three things. No mandate, no tax credit, get rid of the California Air Resources Board, and let the free market reign. You buy what you want.
Our go-to car expert, Lauren Fix, editor-in-chief of Car Coach, co-host of the Total Car Score podcast, live with us here. Mottek On Money, 790 KBC. Stay tuned now for the 49ers on 790 KBC.
You met Lala Kent on Vanderpump Rules. Now Lala and her friends share everything on Give Them Lala.
Bagel, everybody says I say that weird. It has ruined my proposal story.
How Jason proposed, and she was like, he brought in a bunch of bagels. I was like, I have to stop this. I will punch you in the throat if you ever tell this story again and call it a bagel.
Let me tell you, now when I tell the story, I go, he went and got breakfast.
There you go.
Bagels.
Yeah.
Watch what Lala is talking about on YouTube or search for Give Them Lala wherever you listen.